Taxes are confusing, taxes are difficult, and taxes are tedious. So it's no wonder that even with a slew of resources at our disposal, many tax myths remain pervasive. Myths that can cause you to give more money to the IRS than you have to, money that could be in your pocket, helping you live the best retirement possible. Hi, I'm Hunter Brockway, founder of Boca Retirement Strategies. We're all about setting you up for a successful retirement with more money, less stress, and fewer taxes. Today we're going to discuss the top tax myths, most harmful, some not, but all myths the same. First, many go into the tax filing season with a mindset that whatever the IRS says they owe is what they actually owe and there's nothing they can do about it. That couldn't be more wrong. The tax code is full of choices you can make to help ensure you pay the least amount of tax possible. And if you don't take advantage of these choices, the IRS won't correct you. Second, some may get caught up in the belief that paying more than they otherwise would is somehow patriotic. True speaking, when it comes to taxes, Uncle Sam doesn't care how patriotic you are. You won't get an award, you won't get a monument, you won't even get a letter thanking you for your sacrifice. In fact, by legally paying fewer taxes, maybe we can make the government do more with less and not have let them depend on huge tips every year from you. I'm not saying we shouldn't pay our fair share of taxes. You should pay every dime that you owe. That would distinctly be unpatriotic. But we still should look for every opportunity to pay less. Our retirement depends on it. Another big myth is refunds. Okay, the government is at least gracious enough to say that you paid too much from your salary and even return what you've overpaid based on the choices you made that is. They still won't tell you putting your funds in an IRA would have saved you on taxes throughout the year. But please don't treat that refund like a bonus. Think of it as lost time and growth. Your hard-earned funds could have been in your retirement account the whole time building compound interest. In the meantime, they've been using those funds to pay off their own debts or run the government operations. I know you're a kind person, but you don't have to be that kind. You've essentially loaned the government interest-free money. Let's talk about CPAs. Many CPAs are not specifically tax planning experts, meaning they look at the tax year you're in, which is last year's data, and prepare your taxes for this year. They may not look into the future, years and decades in advance, especially when it comes to your investments. Their job is to make sure your taxes comply with laws and regulations, not proactively planning your tax strategy years. Even if they do help you take advantage of deductions, keep you in a lower tax bracket, their job is not to advise you on the best tax advantage accounts or the optimal withdrawal strategy to stay in the lowest bracket in retirement. That's your financial advisor's job. So, retirement is decades away. You have plenty of time to start worrying about taxes, right? Wrong. Creating a plan and taking action now is one of the best ways to get ahead of the tax man and plan out your retirement and how you want to live. Laws might change and the actions you take now might be nullified later. Maybe so. Does that mean we should do nothing? Of course not. In fact, you can try to get as many taxes out of the way now so that even if tax laws do change in the future, they simply won't apply to you. You're never too young to start thinking about taxes. Who writes tax laws? CPAs, tax experts? This is another huge myth. While tax experts are certainly involved in the process, such as in committee staffer positions, outside lobbyists, or Treasury Department reps, they are all guided by politicians who in most cases certainly are not tax experts. In fact, if laws were only created by tax experts, we probably wouldn't have the backdoor Roth. So don't expect any logic when it comes to your tax situation or the tax code. It is what it is because of politics first and foremost. Because they're not created by tax experts, it means they're not perfect, and probably a lot of opportunities to use the tax laws to your advantage rather than the other way around. Another big myth, thinking you don't need a financial advisor because you have a CPA. We already discussed this point a bit earlier, but let's slam the point home. As a financial advisor advises you on the best lifelong path for your money in a tax-efficient manner. The CPA prepares your taxes. Their job isn't to suggest the best tax-efficient investment. They won't analyze your workplace retirement plans, recommend account consolidations, or help you plan for an early retirement to ensure you have lifelong income. Let's move on to retirement plans. Many Americans wrongly assume that they can't contribute to a qualified retirement plan if their employee doesn't offer a 401k. Perhaps they offer a different kind of retirement plan, such as a 403b or a simple IRA. If you're a freelancer, you have access to one of the most potent tools of all, the solo 401k. And at the end of the day, we all have access to the Roth IRA or traditional IRA. There's basically no excuse. We can all take advantage of tax-advantaged accounts. And the last myth. Some mistakenly believe that if they have $1 million in their IRA on the eve of their retirement, they'll have $1 million to spend in retirement. Apparently, those people weren't paying attention when they filed their taxes as many of those contributions were tax deferred, meaning you eventually have to pay taxes, just not at the time of contribution. Instead, you pay at the time of withdrawal. Uncle Sam is patiently waiting to get his cut anywhere from 0 to 50% of your money. Our job is to keep you closer to the 0 than the 50. So that wraps up our common tax myths. Thank you for tuning in. I'm Hunter Brockway, reminding you that it's never too early or too late to start planning for your tax-efficient retirement. If you'd like a consultation on your lifelong tax strategy, feel free to contact us at contact@bocaretirement.com or on our website, bocaretirement.com. Bye. One last thing, we are also slowly setting up a retirement mastermind group I am calling Retirementality. If you don't know what a mastermind group is, it's a group of like-minded individuals getting together to help each other solve common problems. We plan to run this group in a roundtable format, so peers can help each other. We might talk about things like finance, things like healthcare, things like travel, things like local events. If you are interested in joining this group, you can send me an email at contact@bocaretirement.com. This will be a complete anti-sales group designed purely in helping you help others retire successfully.